Hi. Bank reconciliation statement is a sub-process under the treasury, but the audit of BRS, which is the bank reconciliation statement, is generally not given that much of an importance as its underlying risk. It is generally seen as a tick box approach, wherein we will just see if the bank book and the bank statement balances are matching, and if it is not matching, we will try to understand what is the reason for that, and that's it. So an in-depth review of BRS is generally not performed thinking that if the figures are if the values are matching pi to pi, then there is actually no need to dig deep into the BRS. Today we are going to double click on the bank reconciliation statement, on the audit of the bank reconciliation statement, and then see how to do the audit of BRS the right way. We will basically look at the strategic significance of BRS in the entire scheme of things. We will have a process overview, we will have a generic process overview, and how to approach common gaps, some of the fraud cases that we will also see, the root cause of which can be traced to an inefficient BRS process. We'll also see the opportunities for AI and automation, and we will also look at the checklist. So I have given the link of the checklist as the group, as the video description. You can also access the checklist from there. Moving on, let's first understand why BRS is critical. The first thing is that it forms the basis for informed decision making. Cash is king, right? So it is only the balance as per the books that gives the decision makers a view of what is the fund that is available with the company. The second thing, having known what is the cash available, this helps in optimized cash management, support for valuation, and it gives a real-time visibility of the financial status of the cash or the funds availability status. Let us double click and see, and let's see generally how a process of a BRS statement works. Now, generally there are three stakeholders here. One is the preparer, reviewer, and the finance person who takes care of the accounting. So generally these preparer and reviewer would be from the treasury team, and basically the person who is accounting could be from the finance team. So the process starts with download of the bank statement. It is generally logged into a portal, or there is a data that is fetched. There can be automation that's also possible. We are going to look at that. And the bank book is downloaded next. And the third step, the mapping that happens, is what is prepared, is what is done by the preparer. And by comparing the bank statement and the bank book, a reconciliation items are identified, a summary is prepared, and it is given to the reviewer for an independent review. Now the reviewer is expected to go line by line, understand the nature of differences as to why there are differences, as to why there are values in the BRS, whether those differences make sense, those recon items make sense or not, and if it requires an entry to be passed, then the accounting team, then the details are shared with the accounting team and the entries are passed. Generally, there are two type of reconciliations that are two type of reconciliation items that come in. One is which is available in bank book but not available in bank statement. And the second thing obviously is available in bank statement but not available in bank book, right? So there can be various reconciliation items, like check has been issued but not yet presented, or check deposited but not yet credited, or other than these two, the third kind of item that might come are the charges. So the bank charges, interest, etc., those would not have been accounted at in the bank book. Now there are certain entries which are acceptable to have in the bank recon statement. There are few things which are not accepted to be part of the bank recon statements, which we will see shortly. How do we approach? So the first thing is to look for the approvals of bank account opening. Now this might sound like, okay, for a bank reconciliation, why am I looking at the process for account opening? But these approvals form the basis of the population, that is the list of bank accounts. So it is very important to understand who approves the bank account opening and what would be the best way of getting this data. Because if you look at only the ERP, then it is possible that some of the bank accounts which are open but not yet accounted or not yet operated in the ERP would not form part of your population. So it is important that you understand the process for the bank account opening and then get the list. Let's say if treasury is maintaining a list, or if there is a list, if there is a list that is available, if there is a list that is available from board of directors approval. So all this would need to be checked to confirm that the population that you are looking at is complete. The second step to do is to understand the reconciliation process. The process that I have given before is just an indication, right, as to how it might look like. But it is best to understand how exactly the reconciliation process work. Who is the preparer? Who is the reviewer? We are going to see the importance of segregation of duties. From where do they take the data? From where do they take the bank data and where do they take the bank book? What are the parameters entered? Which is basically what is the input that is given in the ERP to extract the report. The third one, once you have understood the approval process and the bank reconciliation, the third thing, as was mentioned partly in the first part of bank account opening, is to ensure that we cover 100% of banks. Right? There could be multiple type of banks that are there. You will also have, you will also have cash credit, you will also have deposit accounts, you will also have term deposit accounts. So don't leave any bank accounts out of the scope, right? So any bank account which the company owns needs to be part of your review. So always ensure 100% coverage. Of course, if you are doing a risk-based approach, if you want to exclude certain things, have a clear justification as to why you want to exclude that. But never ever exclude a certain bank account purely based on the book balance, because obviously the purpose of the bank reconciliation statement is to confirm the book balance. So you cannot take a book balance threshold to exclude certain banks out of the scope. The next thing, which is very important, is be prepared to do detailed mapping when you are budgeting for your audit, when you are discussing the time that is required. Be prepared or allot adequate time for detailed matching, that is line by line matching or one-to-one matching. This is where you will find issues. This is where you could potentially look at frauds, right? So bank reconciliation, don't take it as a half a day or a 1 day, kind of an approach. This will require detailed line by line mapping. Yes, it might sound overwhelming, but we are going to see some of the automation approaches which will make this a bit more comfortable to do. But be prepared to do detailed matching. Next, what are generally the common gaps and findings? Before we get into a few more details, it's good to just understand, before you start off in the process, so where generally the common gaps would be there, right? One of the common thing is Baker checker. Generally, the organization will say that we don't have adequate resources, we don't have enough team members to do, and hence both the preparer in our case and the reviewer are one and the same. This is a huge red flag, right? You cannot have the same preparer and reviewer. They can give whatever reasons that they want, but it's just not it's just not right to have the preparer same as reviewer. Right? Be very clear that at no point in time should preparer should not be the same as reviewer. Right? So this is the maker checker concept where generally there is an issue. There are certain recon items which are delayed, meaning say 2 months back check issued but not deposited, or 2 months back check deposited but not credited. Those things are absolutely not acceptable. Reconciliation items cannot be more than last 1 or 2 days, right? So any reconciliation item more than 1 or 2 days generally is just not acceptable. It's just not acceptable, right? So ensure that you are understanding thoroughly as to why there is a delayed item, right? It is possible, we have seen cases where the old entry is reversed and a new entry is posted with the current date, or which is coming within that 1 or 2 days range, right? So you will have to be very careful. It is a huge fraud risk. So what happens is, let's say that a recon item is say more than 30 days old, they will basically reverse old, let's say previous month, and then pass an entry in the last day. Right? So it's like evergreening of delayed items or aged items. Be very, very careful with that. And then also there are certain reconciliation items that are just not acceptable, which is like you might see some items like bank charges, interest. So in a process that is matured, these things obviously would need to be accounted in the same month. Why is it that it needs to be part of the reconciliation statement and then need to account the next day? There could be some timing difference, so be conscious of that, but generally it's kind of not accepted. And where these days there are a lot of RTGS, immediate payments, even check deposited but not credited, or check deposited but not deposited. I don't think those things are very much relevant in today's context, but it is possible that those are there, but those needs to be reviewed for timing and acceptability. And the third important finding that we generally see is that there is no follow-up for the recon items. So it's just done 1 month and it just left, and then they are not looking at rectifying those reconciliation item or passing the relevant accounting entries for those items, which would be a huge problem. It will just keep on be accumulating. So if there is a reconciliation item, look for the follow-up activities. So every system, generally the ERP will have something called as the entry date, right? Look for this and then see when they have actually passed the entry, the date on which they have passed the entry. Last but not the least is that generally, the timing of this review has to be fixed. There are few organizations who do it on a weekly basis, if not on a fortnightly basis or on a monthly basis. It generally cannot exceed monthly. Even for dormant accounts, even for non-operative accounts, even for accounts where they are not touching even a pie, it cannot generally, cannot happen more than month. Few where you are having half yearly or yearly is dangerous, right? We will look at some of the fraud case studies which were a result of inadequate controls over BRS. The first thing, obviously, you might be aware is the Satyam scandal, wherein one of the ways in which the fraud was concealed is by falsifying the bank statements. So the bank statements were falsified, which had resulted in inflated bank balances. Now, how this could have been avoided is obviously by ensuring that the bank statement that is used for the purpose of reconciliation is genuine. One way of doing it is to be present, or the bank statement to be again downloaded in the presence of the auditor, and then the file can be shared to the auditor immediately, or the auditor can directly approach the bank at least on a yearly basis for a statement, and then in a soft copy, and then that can be used as the basis of reconciliation. So there were two ways that it can be avoided. Either it can be obtained directly, or it can be downloaded in auditor presence. Yeah. The next way in which BRS, the weakness of BRS can be exploited is to conceal unauthorized transactions. Now, this is a very tricky fraud where there would be unauthorized transactions that will be posted. It would ideally be identified in the reconciliation, but it would be reversed during the month end and again posted during the beginning of the next year, or the next month. So it is very important to not just look at only the closing balance. So do not look only at closing balance. Look at the total debit and credit, and then match this with the bank total deposits and withdrawals. This is very, very important, because generally this is not an activity which the auditors would do. They will just look at the closing balance, look at the differences, look at the reconciling items. But looking at the total debit and credit it will be a lot of work. It will involve a lot of reconciliation. If all the debits are not matched, if the total is not matching, then you will have to see, okay, which element is missing. So that's when automation will be helpful, which we will see soon. And then it is important that we match the total debit, total credit, closing balance, and the reconciling items. The next way in which a fraud can be done is basically like the one that I had mentioned before, already kind of we briefly discussed, is on the entries posted and subsequently reversed. Let's say I'll probably explain this a bit more. Let's say on 31st of December, or let's say 31st of March, let's say there is a payment entry that is made, which is a credit entry in the bank book. They'll basically reverse it back to the vendor, and then this entry, if I look at only the closing balance, this entry will not appear, but the next month, say for example the first week of April, this entry is again posted. Right? This will ensure that the vendor, so there would be other controls that will be required, like vendor balance confirmations or vendor balances review. But if those are smaller amounts, or if those are not significant amounts, that's how a fraud basically starts. Smaller amounts for a longer period of time. It is very, very difficult to identify, and the only way in which it can be identified is by this mapping the total debit and the total credit, matching that with the bank book and the bank statement. The other way in which a fraud has been done, which I had a chance to see, is the manual override. Now, whenever there is a automated mapping, so generally you will hear the client saying that, or the auditee saying that, look, I do it 100%, it is kind of manual. 100% it is automatically done. There is a feed that comes in, there is a text file that comes in, and the system will automatically identify the reconciling items. Now, it is very important to understand when this automation did not work. Right? It is possible that some parts, due to some interface error or whatever, it did not automatically clear. So when I say clear, that's mapping of the entry as per the bank book and the bank statement. So that is called as clearing. Right. When this clearing is not happening in an automated way, there will be a manual override, meaning manually it will be cleared. Now be sure to check for the user IDs. So generally, if it is through an automated feed, there could be a system ID as the user ID. Right. So this becomes important. If this user ID is an individual user ID or an individual employee user ID, then it is possible to identify or split between those transactions that were cleared using system and those transactions that were cleared using manual. It is very important to identify these transactions and then have a greater level of scrutiny. The other way in which it is there, the other way in which the fraud is done is by introducing ghost accounts. Now, these accounts are not even in the books of accounts. These are, not even in the books of accounts. These do not form part of the books of accounts. Now, how do we identify this? If you remember our earlier discussion in terms of the audit approach, the first thing to do is to start with how a bank account is opened. Independently verify from a different listing or from the approvals that what are the bank accounts that were open. It could be through the minutes of the meeting, through the board minutes of the meeting, or it could be through a listing that is independently maintained by the treasury team, or it could be any other corroborative evidence. So you have to keep your eyes and ears open. Look at some other way to confirm. So always have another source to confirm bank accounts. Do not go by only one source. Look at different sources, look at different ways to confirm that the listing that you have in terms of bank accounts are in fact complete. The next thing that we will see is the automation opportunities. Now, by now you would have realized that if you have to do a one-to-one matching, that is obviously a lot of manual effort that is required. But it isn't necessary that it has to be manual. Right? So the bank statement retrieval, you can use tools like Power Automate or UiPath, or even you can use a macro to retrieve the bank statements. Now you need not have to do that as an auditor. This can also be a suggestion to the auditee, but at the same time ensure that if you are given a view access to the bank statements, you can use these tools. Now once this is extracted, OCR can be used. Now OCR is a built-in tool that is available in Power Automate or UiPath, or you can also use Power Query to extract the bank statement information. So you can use in addition to it, you can use the Power Query. Sorry. Once you have got the data, you can match the transactions. Now there are a lot of tools that are available in the market, paid, free combinations, wherein if the bank statement, so generally for a corporate bank statement, there will be a reference number or a transaction number, right? Ensure that you get those transaction numbers and then map or update it in the bank book. If it is not being followed, then that's a good recommendation for you to have, because that will ensure that the matching happens seamlessly. You can match by date, you can match by value. So it's generally date plus value, but if I put an entry today in the bank book, it might happen that the bank statement that it might get reflected in a couple of days, right? So this is one way. The other way is to basically look at the beneficiary account, right? So you can look at the beneficiary account if it is available, or the transaction text. Right? These are the ways in which you can identify a unique transactions, and then flagging of exceptions can be automatic. Now there are, the simplest query is Power Query. The simplest tool that is available, free tool built within Microsoft Excel, is Power Query. If you are using any other tool, look for a similar capability. It is possible to use AI to perform predictive matching. There are algorithms available, there are tools available. The other thing that I have also found it useful is KNIME. KNIME is also a useful tool to perform AI or ML or basic standard data massaging, data matching activities. Anomaly can be tried, and it can also ML, machine learning, can be used to identify behavioral analytics, the exceptions, outliers, entries on a Sunday, entries on a Saturday, entries on a holiday. So those wouldn't make sense in a bank book, right? So those would be helpful. When you are looking at a BRS, don't look at just only, matching of these two. When you are looking at a BRS, you also look at how bank book, that is the ledgers that is maintained by the company, is making sense or not. Is there any way in which this can be fudged to make it tally with the bank statement? So you need to have a broader view when we are looking at a BRS. Hope by now you would have got an understanding that BRS is more than just tick in the box, more than just doing some matching of bank book and bank statement. It is much more than that, and the underlying risk and the fraud risk that we discussed are phenomenal, and you can look at these risks day in, day out. To help you to get more into it, there is a checklist that is updated in this link. The link will also be updated in the video's description. Of course, this is not meant to be an exhaustive checklist. It will just to give you a feel as to the topics that we have covered during this session. Hope you have found it useful. Thanks.